Have you been trading and you are trying to learn all the rules of this game of trading, memorizing, looking for information, and still you're not pulling ahead in this activity? In this video, I'm going to explain you why you have it backwards and you need to start understanding the game of trading in a different perspective. Is trading a game? Is it a profession? Or is both? A game is fundamentally a competitive activity. And to play, you need multiple agents or players to be able to play it. And what each player seeks when participating in the game is to maximize their points or utility. Each game has to be carried out with a series of rules. Therefore, a game is a competitive activity where participants compete to maximize their winnings by following a series of established rules. A professional of a game that you watch on TV is there thanks to a practice and discipline that he or she has developed more than others. These professionals have a greater passion than others. So from this perspective, I want you to understand why trading is an internal issue more than a technical one. In addition, it's an activity more mental than physical. And although someone has more talent than others, for example, in learning economic terms and understanding trading theories or gathering data, the practice and improvement and the execution of something simple becomes more important than any other talent. In this video, I want you to understand why most likely you are inclined to unconsciously see trading as a game, and this can lead you to complicate it by trying to learn and memorize the rules of that game that does not go with the real business, but instead with a conditioned illusion that makes you believe that if you learn all these rules of this game of trading as is presented everywhere, you eventually will become one of the winners. In practically everything that surrounds us in life, in business, in religion, etc., there are two types of games, which are finite games and infinite games. Understanding what type of game you are participating is key in order to understand how to approach it, how to participate, how to adapt to that specific game. The finite game is played for the purpose of winning the game, and the infinite game is played for the purpose of remaining in the game. The finite game is where each player has a finite number of moves and a finite numbers of options for each move. In other words, you know and can tell who the participants are. You have fixed rules and you have a fixed goal that has been agreed upon. For example, soccer, we know the rules and we accept them. And we know that at the end of each game, the team with the most goals wins. And we all accept that at the end. Now, the infinite game has known players as well as unknown players. The rules can and will change, and the objective is to maintain and perpetuate the game. An infinite or unlimited game can change under agreement of some participants at any time while the game is in progress. The rules are always designed to deal with the specific threats against the continuation of the game. The infinite players use the rules to regulate the way that they will extend the limits to force their continuation within the game. Broadly speaking, finite players play within limits or borders, and infinite players have no limits or borders. When you put a finite player against another finite player, you have a stable system. Soccer is stable, basketball is stable, boxing is stable. When you put an infinite player against another infinite player, the system remains stable because there are no winners and losers, but a continuous game. But when you put a finite player against an infinite player, the finite player is there to win and the infinite player is there to stay and keep the game continuous. And the finite player is therefore always in a difficulty. In finite games, the rules must be published before playing, and the players must agree to them before the game begins. A point of great consequence for all finite games is that the agreement of the players to the applied rules constitutes the fundamental validation of such rules. The rules are not valid because the Senate approves them, or because mythical heroes once used them, or because God pronounced them to Moses or Muhammad, or because there is real knowledge in trading, for example. The rules are valid as long as the players playing them use them. In trading, first of all, what is the source of all these rules that you find free everywhere and that practically everyone is mentioning and using to develop systems, strategies, methods? What is their validation? In fact, you hear from a lot of people everywhere that trading is a zero-sum game because someone loses when someone wins, and vice versa. But this is a quality of a finite game. At the end of a game, a season, a day, there's a winner and a loser. But this does not really apply in infinite games, where there are constantly new players and players who are eliminated, and where there are big participants or infinite players that can regulate and change the rules in their favor so that the game has continuity and remains moving in the most favorable conditions for them. Therefore, rules change based on the adaptation and survival of the game. If you are just starting or you already have some time doing trading, you are only a participant in an infinite game or an infinite business that has existed before you and will very likely continue to exist with or without you. But unfortunately, everyone teaches you trading as a finite game that you end up facing with imposed rules of easy access so that you fall like the majority trying to follow them like an indoctrinated person, therefore validating them by using them and talking about them, and with that raw material begin to invent strategies, robots, or systems that face the market as a finite gaming arena where it is assumed that all the participants are in the same situation and they are governed by those same rules, and therefore with this illusion you believe that if you study more and do more backtesting and accumulate more knowledge than others, you will become a winner. But even with so much access to the so-called trading knowledge, most of the people continue to lose in trading. Why? Because the trading industry and those who leads that industry know that the individual is not going to put their savings into an account without giving them something in the form of theory and rules that allows them to assume that they are using their brain and feel like they have some sort of control and influence over the market. The business is simple. Those who have access to information and money follow infinite rules in this game of trading in order to keep the business alive, continuous, and controlled, which means profitable. And they give you, the small trader, finite rules in this game of trading so that you can combine them in thousands of different possible ways that occurs to you, hoping to find the perfect combination in order to win. Therefore, you participate believing that one day you will find the perfect combination of those rules, reaching finally the end of the game. But in reality, the game never ends because it's infinite, because it's an infinite business, that whatever you thought you have found as a perfect combination is likely to change. Therefore, having a technical analyst degree or a certificate of some course that you took or any diploma of a trading academy are useless, because in an infinite game, titles are not necessary. Trading is something continuous, does not end, and change is always a constant because it's controlled by infinite players. So your goal is to understand how to observe, think, and adapt as an infinite player, and stop thinking and acting as a finite player. Therefore, you have to get rid of all the information that makes you see trading as a finite game of special rules that you need to memorize. Infinite players understand that winning in the short term is not as important as remaining in the game in the long term. Another important characteristic of an infinite player is that the personal growth is way more important than whatever he thinks he knows, and proportional to his results, and not to the titles or labels he obtained. So be aware that most of people are trying to find the strength, the winning optimization, but from a finite game perspective, because they believe that once the strategy and winning optimization is found, the game will end because they become winners, when in reality it's a continuous game. And when people think that they have found the holy grail and already won the game, the strategy or optimization changes and they have to start again, finding for a new combination. Does it sound familiar? This is why you might think that if you learn all the rules perfectly as they are taught by the experts, you will eventually win the game or the game points, money. This is why you will likely continue studying and studying, watching videos, trying to obtain and gather information from groups, forums, Telegram groups, where neither any of those people can identify and differentiate in what kind of game they are actually participating, because lack of experience and understanding, making it seem at first glance that everybody is helping each other to become winners of this finite game. When you realize that there are no such things as institutionalized rules, it means that you understand simply that you can buy literally in any point on the chart. Let's say that you buy at point A. The only way you can make money is that the price goes up to a point that we're going to call point B, and then you close that trade. You bought at point A and then you closed at point B, and vice versa. If you are selling, you can sell at any point in time in the chart, and in order to make money, price has to go down, and at a certain point you're going to close that sell and make money. Now, point A and point B can be anything. There's no rules. You have to understand that if you click right now and the market is open, if you click for whatever reason, because you toss a coin, or because it's going to rain, or because any other reason that you want to buy or sell, there's no rule for you to wait for and then enter the market. It doesn't exist. There's no special or institutionalized rule. You just can click and then you're going to buy or you're going to sell, and the things can happen. If you bought and the price goes up, you make money. If you buy and the price goes against you or goes south, you lose money. The same here. If you sell and the price goes down, you make money. But if you sell and the price goes up, you lose money. But the reason behind, whatever reason it is, there's no rules. So here is where we have to understand there's no rules in trading. Now, what you hear from other people are popular ideas, popular theories, popular approaches that everybody talks about. And when everybody talks about it, those rules are validated, not because any special reason, but just simply because people talk about it. That's a subjective value. Now, when you understand this, now let's say that you are following some type of trend. Let's say that you find that the trend is your friend, and then you're drawing trend lines, your outer trend line right here. The price broke that trend line, pull back and give you a candlestick formation, and because of this reason you're buying the market. So you buy right here, and let's say you put your stop here or you put your stop here for whatever reason. Anybody can explain and go into detail of why it's better here or it's better there, but let's say you buy, and then you're going to put a target. Let's say you put a target right here, next resistance, and you say, well, if I buy here and if I put my stop here, it's 40 pips. If I put it here, it's 68, and if the price goes in my favor, it's 106 pips. So it's like 2-to-1, let's say, a ratio. The price goes, but then takes your stop, takes you out. So this is the mindset of a finite player, because all this setup, what people call a setup, is based on an idea, based on a subjective validation, and you're going to trade based on winning or losing, meaning that you're going to trade and hope for the best. The price goes up or goes against you, it takes your stop, you lose it, and if it takes your profit or it takes your limit, you win. See, then if the price either you win or you lose, then you wait for the next setup again, or in other words, for the market to look alike that setup that you validate more than others. And again, like any other game, you are analyzing and then you wait and then you expect that when you pull the trigger, then you're going to be a winner, just like any other game and any finite game that you understand. Now let's say that the price goes down here and then you say, this new trend line, okay, now the setup didn't work out, like this is a new trend. You reverse or you redraw lines, and then you say, this looks like a head and shoulders. All right, so I can draw a Fibonacci tool and it's at 32%. Then should go down here. Once this candlestick formation appears, again, you're entering the market, put in a stop, whatever reason or in whatever place you think is better. People are going to say that it's better here. Other people are going to say it's better here or here. Whatever it is, at the end, you're finding a setup and thinking about trading like a finite game. Okay, it has to fulfill. I'm going to lose or I'm going to win. That's why when anybody talks about the market and talks about their trade, says, oh, the market took me out, or the market didn't fulfill my setup, or that was a losing trade. But the problem is that this mindset, either win or lose, shuts you down. It's like the game just ended. But then you don't pay attention that the game is infinite. It continues. But you have to be paying attention to specific information so you can follow up. And even if you lose, you don't just say, oh, I lost, and that's it. I look for the new setup. But you say, I lost, but then I can react. I can change. I can go to the opposite direction. And that's the mindset and the skill that you need in an environment that changes with or without you, in an environment that is manipulated, in an environment that whose main participants or the owners of the business are here to make money and they don't follow any special rule that is out there and that everybody talks about. So if we change this approach, let's look at previous months. And if you see here, I have a square which I call coordinates. I will explain that later in other videos. But an important thing of the coordinates that are derived from price, which is the right side of the chart, and time, which is the axle that is down here, you get this coordinate, just like a map. Now, this one is the 8 hours of the beginning of the month of August. What I want you to see is that once you have this information, which is based on the beginning of the month, the price, which can be monitored with candlestick formations or tick bars or volumetric charts, it doesn't matter because the price is just going to go to one direction or the other. But let's go back to candlestick formations. What the candlestick formation is going to say here is that if you keep looking at the market as a finite game with rules, your mind is going to be likely to see maybe this as a head and shoulders, and then wait for this candlestick formation and say, oh, the price is going to go down, and maybe add some other analysis or theory that you already have in your head. But then as the price keeps going, see how the price goes above this same area. The price continues to that direction for some days, then the price returns, it stays there inside this same area, and then goes out again. Now, if you are waiting for this decision candle, or maybe some indecision candles, or dojis, or dragonflies, or whatever you want to call it, or you're waiting for the trend is your friend and until the market breaks the trend line, I want you to understand that you keep looking at the market in a finite game, that the only thing that is happening is that you just chose some rules that mostly you found or you accepted from other people that you have been listening to. But when you see this information and then you pay attention, remember what the owners of the business want to do, they want to get as much money as possible. And they don't want to just buy and sell giving free money to everybody. That's why how the price goes to this decision candle, but then comes up here, then it returns, it comes down here. So this also looks like the continuation of a trend, takes out this stop. This one looks like it's going to be the start of a new trend, takes a stop, and then finally goes to one direction, as we can see, and then goes, continues, and then it stays above that. And then I have here again the same area, which, by the way, I talked about this area in previous videos that you can watch in this channel, is the Asian range that I called. But look at how the month passes, and if you look at the market from decision candles, formations, breakouts, trend lines, support and resistance, like, you're getting too distracted, and then you're trying to win in an infinite game with rules as if this game was a finite game. The next month comes, you can put this new or most recent coordinates, and as you can see, what the price does, goes up and then goes down. The mind of a conditioned person can say, oh, it broke the trend line, decision candle. But if we switch to tick charts, it doesn't matter, because the area is a constant. The price went up and then went down, because remember, two things can only happen: the price goes up or goes down. Now, the problem is that if you're trying to follow established rules, then you're going to be more emotional, because you're trying to find perfection. Most people don't understand or are not aware that they don't know that they don't know. But the price, regardless of what type of chart you look at, as you can see, the price just goes up or goes down. If your brain is not distracted by noise, see how the price goes to that direction, the price goes close to this same area, but then continues going down. Just imagine the tranquility that you can have when you just concentrate on one thing, and then you understand that most of the time price just goes away from, let's say, an area like this, but then comes back. But one of the things that you can observe is that this is a constant area where you can manage risk, because the only thing that we can manage is risk, until, as you can see, again, the month ends and then you have this new area. Now, one of the things that I talked about in this video is that this is an infinite game. It means that an infinite game tends to return. Just observe how this month the price was around here, went down, but then the next month starts and then the price tends to return to this area. And this is where the price is right now. It's about this same area, and the month is about to finish. So we're at the end of October, and the next election is going to happen next Tuesday in the United States. And usually that's an event that brings a lot of volatility, which I want you to observe. This same area, which starts again, is the first day of the month, which is going to be a Monday. The first 8 hours, you're going to have an area like this, and I want you to observe how price is just going to get away from it. When there's more volatility, what the price is just going to do is getting away from this. But that helps you to understand. See how this month so far the price has returned. If you're looking at this as a trend, the trend is your friend, and trying to look for that next big movement, realize how the price goes away, comes back, 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 goes away, and it's coming back. Because trading is cyclical, because it's a business, it's an infinite game. But the advantage that the owners have is that they know where the stops are. So they can move it accordingly based on how much money there is, where are more sells, where are more buys, like how many people reacted with this movement to the north, how many stops were here. So that information changes the whole environment, because you are conditioned, deceived to play and learn and apply based on some rules that are just there for free, so everybody talks about them. But then the big players, the infinite players, are not playing by those rules. But yet you are trying and trying and trying to follow rules, when in reality it will become more simple if you are able to pay attention to one specific area and then buy, sell, and manage your risk. And I want you to understand this is not a strategy. This is just a way to start seeing this business from a different perspective. Now, if you want to be trained and understand the principles, which I talked about a little bit, price, time, probabilities, goes up or goes down, and manipulation, when you understand those four fundamentals, which any strategy, any method is based on, most people don't understand it and don't know how to talk about it. When you understand that everything that you see outside is based on those four principles, then you're going to be free, and then you're going to be able to adapt, because you're not thinking as a finite player, but you're adapting as an infinite player. So for the elections, November 2nd, remember, from 6 p.m. Eastern Time to 2 a.m. Eastern Time, just mark, just like here, put your highest price, your lowest price, and look how the price just goes away from it. They might play around like this, but for the rest of the month, you're going to see how much volatility it's going to have, and then how risk-reward ratios are very, very good. So remember, switching from the mindset of a finite player to an infinite player means that you understand that when you're trading, there's no such thing as the end of a trade, but the continuation of a process. If you're able to observe the process and follow up the process, then you are thinking as an infinite player and not as a finite player that just sees the fulfillment of the strategy as winning or losing. Ask yourself this question: if you were the business owner of this industry, of an infinite game, how do you get people to act in a similar way even though the individuals are different? How do you get people to sell when you want to buy, or buy when you want to sell? It is by inducing beliefs, by giving them rules that you don't follow but help you to condition their behavior. The beliefs are derived from the rules that give a sense of fulfillment and permanence. It is the indoctrination, conditioning, but it's not real information. Do you get it? Their game, and therefore their rules, are totally different from what the masses follow. No wonder why the masses lose and the business keeps on going. I leave you with the most recent experience down below in the description regarding our advanced training, so you can listen the transformation, the new perspective that people have when they free themselves from all these rules that everyone preaches but are not necessary. This is Luis Morelos, and remember, trade with logos, trade with logic. See you next time.